The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, after the big down day on Friday we had in the grains and oilseeds after the USDA data dump, very curious to see what Monday's trade was going to bring us. Well, we snapped back in a big way. Soybeans, the upside leader with strong gains across the soy complex. That spilled into wheat, into corn a little bit, and a good day in livestock. Let's talk through things. Joining us now, John Heimberg with Total Farm Marketing. John, hope you had a great weekend. As we came back to it on Monday, I think a lot of folks were asking, all right, what is going to be in store for us here across this grain and oilseed trade? And lo and behold, a turnaround Monday, I guess we could call it. I mean, a really strong day across the board led by the soy complex, John.
Yeah, we'll have to watch on Turnaround Tuesday tomorrow. Hopefully we don't stay true to form here. But, obviously we got the report on Friday last week, excuse me. And, the market had a pretty difficult day with those numbers. Now, I wasn't surprised by that. I think everybody in the marketplace kind of knew we were going to get some bearish numbers, especially the corn number. That was kind of really bearish. And then we're going to see what the market would how we would react as we get back this week, because the algo traders, computer traders, they trade the report. They're triggered off the headlines, things of that nature. We get back on Monday after a weekend where people get to digest the numbers a little bit more. And maybe we saw some flow. Plus, we did have some nice news in the bean market today. Again, just enough to fire up those front-end contracts as, the demand continues to be pretty good for domestic usage. Crush 227 today, million bushels. Market was thinking about 206. That's a big push. And you think the fact that USDA took 50 million off of export demand on Friday, we just added 20 million of crush back in to some point, So those are things that are out there. We did hear some buzz that China was in the market again, looking for beans. And then we had a nice strong move in the products, oil up almost $1 a pound, meal up $8 today per ton. So those things kind of help fuel this rally in beans as, we went through Friday's reversal high and added to it, with today's trade action. So technically the close was really good for beans today. We'll have to see if we can continue to get follow through or if those China rumors are substantiated in that regard. Corn, the other side of it, I think wheat was a big factor. Some of the issues going on between Russia and Ukraine in terms of some port strikes got wheat fired up a little bit on some possible escalations. We saw the Russian wheat crop was forecasted to be lower next year. And, so wheat kind of had a couple rough days going into the report. I think we just saw some snapback, even though the numbers from USDA for U.S. wheat weren't exactly friendly with production increases and increase in carryout. I think that kind of carried corn along today. The disappointing thing in corn, I would love to close back above that 200-day moving average. So we finished right underneath of it. We'll see if tomorrow can give us there, because that corn demand, though, with export inspections today is still very, very good.
Well, and you mentioned the crush number, all-time record, 227.6 million bushels of beans in October. So a very impressive number there. And, I look at all of this, and a good snapback here on Monday. I wonder, too, if some of this maybe human element coming back in after the dust settled a bit from Friday's data dump. We got all those flash sales. We got the WASDE, of course. I think some folks were saying, okay, we don't believe the yield estimates that came out from USDA. So I wonder, John, did we get a little bit of human element back in here to start the week potentially?
Oh, I think so. That's what I thought. The market was traded by the algos. And those and the computer traders and the headline traders. And, we get back and obviously a 186 corn number, nobody's quite in the camp that number is out there yet. I think the market is actually trading an 80 to 82 type number in that regard. The only problem is still there's a lot of wiggle room in the demand balance sheet, especially that extra, 300-400 million that could be there in feed usage. So, but it was actually encouraging to me to see the USDA throw another 100 million bushels into that export demand. Maybe that's, not enough yet in that regard too. Plus, ethanol grind's been pretty doggone strong here in the last handful of weeks with the fresh supplies coming at the marketplace. So those are things the traders are looking at. Okay, yields X, The biggest problem still in this report is that extra 200 million bushels we got in September. They obviously added that to the carry-in number as carry-in went to 1.5 plus versus 1.3. So we had to balance all that out. Again, it's a set of numbers, and the cash market's been looking better for corn, and so those are things that are going to drive the market forward here. And when the market looks at the demand pace that we're at, you talked about that export inspection number a little bit. That's our sixth best export inspection report since 1982. Okay, so there's only 5 other days since 82 that were even better than that week. So and considering this is the bean shipping window, that's impressive to see that type of demand for corn. So again, I think tomorrow could be another very key day. Is this just the flash and pan recovery and then we get back to trading the numbers? Or, is this where, okay, we got our numbers, we got the data dump, but here's what's going on in the headlines and the news in terms of corn demand, it's possible soybean demand. Traders like beans, they can push this thing higher than they need to just because they like trading beans.
Good thoughts. Good thoughts. How about the livestock trade? Let's go over there a little bit. And you mentioned this to me before we started our conversation that maybe a technical bottom in cattle. What are you seeing here on these charts? How do things look as we start the new week?
Well, I sent this out to my cattle producers last night, and I saw it on Friday. You go look at the live cattle charts. First off, December went down to the 200-day moving average, rejected it, finished higher on Friday. February and later contracts, February, April, May, June, basically all the way out, not May, but February, June, August have a double bottom on the chart. Again, testing that 200-day moving average on that February contract. We opened very weak today, down 2+ on the initial trades today, and that disappeared in a hurry. So we finished nicely higher, 225 higher, so $4 off the low on the close. I consider that to be pretty impressive look. Now, is this the bottom? Not going to say. Again, dead cat bounce, those are things. But let's look at what's coming at us this week. I know cash trade wasn't the best, 228, but still 228 with a market trading 221 out there. You got cattle on feed coming Friday. We're expecting that placement number to be in the 97.5 window, 97.6. That's after last year's reduced number here on this report. So again, just reflective of tight cattle supplies. This might be a spot here, just given the way the market's handled these last two trading sessions, where maybe we've reached a bit of a technical bottom. Now, I'm not saying we're going back to 250 or anything along that lines. We're going to need cash trade to wake up to do that. But, you get some recovery back. We still got a gap on that February chart up around 233. That needs to maybe get filled. So we'll have to just see how those things kind of play out. But to me, I think rallies are still in the mind cap, at least with the sentiment of the market where it is. Those are going to be windows to hedge or build some defense in and let the market prove the otherwise in terms of going higher.
Hogs were a little more mixed on Monday, but still some green on the screen there. I think about Friday's report, too. We got some updates for beef and pork production that were lower on the WASDE, so maybe some of that, finding its way into these protein markets as well. John, I mean, thoughts on that? Thoughts on the hog trade from Monday's session?
Yeah, I'm with you on that side of it in terms of lower pork production, lower beef production. Obviously the beef's a story regarding imports and everything of that nature. We still haven't lowered the Brazil tariff, but we took it off of a handful of other countries here over the weekend. But again, I think the market, maybe that was that initial negative reaction, was that term, seeing what happened there. You go look at the pork side. I mean, obviously we need more export demand. We need China to be in the market, buying some pork, things of that nature. Right now, we just got a tough trend going here. You got the cash index continues to slide. You got pork retail values, very difficult day on Friday. So those have been on the slide. And it just made it real hard for this market to find some footing here. Is that, that December contract late last week went back, put some new lows in. At least we're kind of consolidating here, but consolidating at the bottom end of those lows, which is not encouraging this time frame. That index has really come down. Now it is still trading $9 above the board, at least during the session today. So maybe that gives that December contract some support as we get closer to expiration. But right now, just the fundamentals aren't there to really support that hog market. I was hoping we got a turn here early last week, with that nice run higher, but that just ran out of gas really quickly because the fundamentals just didn't come with it.
John, any final thoughts you'd share or reiterate with folks as you look across the markets here to start the week?
Again, just keep balancing what you're doing on the marketing front in terms of grains, especially in cattle too. If you get some rallies, make sure you reward them. On the grain side, we like the rally. We've moved a long way in some of these prices. Still got maybe a long way to go if they go to some technical targets. But at the same time, let's just make sure you're keeping some balance underneath your position. In other words, if your position is long in the bin with bushels, puts are still relatively cheap. Don't forget last year we put a low in April in the soybean market when that South American crop started coming together and harvest. Yes, they're dealing with some dry weather. That may be some of the reason we've popped up a little bit again today. If they're a little dry, that maybe gets a little bit more U.S. business. But at the same time, when they start harvesting that crop, it's still going to be, even if they lose 10%, 160 million metric tons, which was last year's record, that there's going to be a supply of beans coming. I like those May puts under the bean market. Let's be wrong with the put and let your bushels continue work to the upside. So keep that balance. Same thing with corn here. Yeah, the market doesn't believe the yield, but there's still a lot of corn coming because that 90 million acres, that this rally can fall apart pretty quickly if all of a sudden demand were to dry up because prices got a little too high.
John, if folks want to reach out, talk with you there at Total Farm Marketing, what's the best way?
Feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heinberg, Total Farm Marketing. Always good to chat. Thanks for joining us on the show. Have a great week.
You too. Have a great week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.